Welcome back to the Commercial Real Estate Show. I'm Michael Bull. Today our show title is Boom, Bust, or Bubble. We have Mitch Roschelle with us. He's with PwC. He's their U.S. real estate practice leader. And Mitch, one of the things I think that people talk about where we are in the cycle, like every property, class of property in geographic area around the country is in the same stage of the cycle, but that's really not true. Let's talk about some of the differences there for some of the various property types and areas. You know, what do you see?
So I'm going to take two big buckets. The first is going to be the apartment subsector, and then we'll jump into office. So if you just think fundamentals for the apartment subsector, we have 3.5 million Americans, many of whom are millennials, some are sort of leftover Gen Xers, who are in the household formation bucket, meaning that statistically they've moved out of their parents' house, but we haven't built a new home for them, whether it be a single-family home or an apartment. So what that is a comparison of housing starts and household formations. So with that kind of robust demand, we've continued to build apartment product at a rate considerably greater than we've built single-family product, yet rents continue to rise. So if you look at that underlying fundamental, it argues for there not being a bubble, not being overbuilding going on in apartments. However, we definitely see cranes in the skyline. So I figured I'd highlight a couple of markets, if you don't mind. Mm-hmm. Let's take San Francisco, for example. So historically, we've added to new supply of apartments at a rate of about 2 to 3% a year, meaning the new additions are roughly 2% of the existing inventory. Right now in the United States, we're adding new supply of apartments of a rate of about 3.6%. So that's a little bit greater than the historical trend. However, take a market like San Francisco, we're adding at 7.4%, but more importantly, rent as a percentage of household income in San Francisco is almost 31% versus a national average of just over 21%. So what we're seeing there is very expensive product being built and a lot of it. So San Francisco may find its way being a little bubbly.
Well, it's interesting because I would have thought that the percentage of rental payments to income would even be higher in San Francisco right now. So what does that mean for the sustainability of the apartment market and some of those heated up markets like San Francisco?
San Francisco is one of those markets that we really have on sort of bubble watch because so much of the growth there is tied to the technology industry. And while it has great net immigration of people moving into the market looking for jobs, if there would be any hiccup in the capital markets as it relates to technology, whether it be an IPO that doesn't do well or earnings reports in one of the companies there that were a little off, it could cause a little bit of a stutter step in the continued growth of that economy and may question whether or not that rent level is justified. I'll give you another market by comparison, if you're so inclined, which is Nashville. Nashville made it into the top 10 in emerging trends, as you recall from our show a couple months ago. They're also adding inventory at a big rate, roughly 7.6%. But by comparison, Nashville has a rented percentage of income of 17.5%. So what's interesting is Nashville is a considerably more affordable market, not only from a cost of living, but from a cost of doing business. And that combination is what will continue to sustain the growth of the economy in a market. Low cost of doing business, low cost of living. So the reason why we have bubble watch on for a market like San Francisco is because it has a high cost of living, but it also has a growing cost of doing business.
Well, it's interesting that you have a bubble watch because James, our show producer, that's one of his fears when he is bathing his son in the bathtub is
bubble watch. That's a different bubble, but I'd also caution James to be looking out for that bubble.
But you got to watch out for that one. Well, what about the office market? Where are we in the cycle there?
Interesting thing about offices, and one of the things we took a look at is the inventory of office space across the country by decade in which the office stock was put into service going back to the 40s. And we compared that against a landscape of growth in office-using jobs and sort of total jobs, and also the percentage of job creation in this country that is office-using jobs. And this is something you can share with your audience in the video version. Unfortunately, they don't get to see my pretty face live or my great hair live. But more importantly, what's interesting is if you look at it, we're continuing to create office-using jobs in this country, but we haven't meaningfully added to the stock of office space since the 80s. So the fundamentals on paper for the office subsector continue to look strong. The only challenge there is the square footage per employee, because right now the forecasts are less than 150 square feet per employee, and if you go back 10 years, we were at 250 square feet per employee. So the question will be, if we shift towards less and less square feet per employee, we can continue to grow office-using jobs and not add to space. But if there's pushback at the, let's say, 150 square foot per employee mark, and the workforce says, we need space, then what we're going to find is the need for new construction. So right now, because demand is high and we haven't added the supply, we're seeing an uptick in rents in apartments. And in fact, data from our upcoming PwC Real Estate Investor Survey suggests that the office sector is going to see rent growth in the 3% range. So that's pretty strong, and I know you have Ryan Severino on the show, so he can give you REIS data on office rent growth. But we're seeing rent growth that's meaningful, which is justifying the cap rate levels that we're seeing as well.
So you're saying we're on a break here, but third inning, fourth inning? Well, we'll find out. We have to take a break. We'll be right back with more Boom, Bust, or Bubble. I'm Michael Bull. This is the Commercial Real Estate Show. We'll be right back. The Commercial Real Estate Show is brought to you by Bull Realty, a great place to do business. Xceligent, information for the professionals. And Commercial Search, properties for sale and lease. To access these companies or for additional videos, podcasts, and articles, visit CREshow.com.